Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views.
Hey, good morning. Monday the 12th, 2022. Hope you had a good weekend. Hope your holiday season's off to a good start. We got our tree yesterday. Haven't decorated it yet. I got family members a little bit under the weather here. Hopefully everybody gets healthy soon, and hopefully you guys are feeling good out there. But all right, let's look at the markets. Actually, we're trading now. We're into the trading day. I tried to record this. I did record this earlier, but had technical difficulties, so we're trying it again. S&P 500, still see we are in this downtrend. Go back, see the peak January of this year. Boom, boom, boom. Recently retested, failed right there once again. And now we're just kind of marking time until we get some kind of catalyst like tomorrow's CPI print. Wednesday, they got the Fed meeting, Fed decision, 50 bips, obviously heavily expected there. But the language and the tone of Powell's comments much more important. I don't know. So we'll see. You could get a bullish setup. People are still very underweight, what have you. We could run a little bit into year end. Totally possible. Get the Santa rally still. But I think it makes sense to think about lower levels going into 23. So that's S&P 500. We also did realize that today the market remembered that it's winter. So natural gas up 8.5% right now on the UNG. Futures are probably about the same. We look at crude, just going to the USO, that's up. That looks pretty good, up 2%, just after 6 straight down days in a row. Just heavy. And we've been talking about this for a while, not adding new longs because it's just so heavy. Although I did add FANG, but then I took off FANG. Just couldn't. It went through through support here through the 200-day, so took it off. Just boom, boom. It's kind of market where if you're not getting the action you're looking for, and these things start to show technical signs of breaking down, I think you've got to punt. So anyway, that looks interesting. I still am kind of waiting and seeing. We definitely have some energy exposure, so seeing how that acts. Let's go to a sector that I think could be interesting going into 23. And it's funny, when I recorded this earlier, I talked about medical devices, and I see Citi actually has a piece out today on the same thing. They actually upgraded some names, downgraded a name. Anyway, the thought here, med device has lagged big time in 22. They had 3 real headwinds. 1, inflation. 2, their supply chain. And 3, staffing shortages in hospitals. All that's looking to improve going into 23. And you've got a situation where if we go and pull out medical device versus healthcare in general, let's just do that real quick. XLV. We see this year it's lagged big time. We pull the 1-year chart out. Actually, let's do the 5-year. So 5-year look first, and you can see how much med device has really outperformed overall healthcare over the years. And this really ended late 21, early 22. So the call here as we go into 23 is really just for this gap to close. I think it's a real good chance medical device defensive, and then it's healthcare. Offensive in that you've got probably an increase in elective procedures going to be done in 23 over 20, 21, and 22. So the environment for doing these procedures is back. You've definitely have some companies that are in growth mode. If you look at some individual names, we pull up technicals here. Let's get rid of this XLV chart. And let's just look at, boom. We pull up Stryker, SYK. Really good looking chart up and away through the 200-day. You got 50 and 25-day moving up. Zimmer had a huge move up through the 200-day. We look at Intuitive Surgical, ISRG. That thing looks good. So really the call here is for the broader group to really start to perform. And I don't know that you need to even get involved until you get a pretty good break. Like even right now, today, it's acting okay, but it's peeling off, and that 200A just looks like it's real good resistance. So why not just wait until you get above there? That is it. Have an awesome Monday. I hope this works and it gets sent out. Talk to you tomorrow. Hope for a cool CPI.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.